Hello and welcome. Thank you for taking the time to join COB Blue Holdings. That's our regular investor webinar. Today you've got me as your host. My name is Joel Crane. I'm Investor Relations Manager, and I'm joined by our CEO, Joe Katarabik, and our Executive Manager, Andrew Tong. The intention of today's webinar is really threefold. First of all, Joe's going to provide a sort of a broader corporate update and drill down some of the refinery economics, as well as some detail on the company's timeline and upcoming milestones. Andrew's going to provide an update on the cobalt nickel refinery project progress. He's going to talk about recent test work and discussions with potential feedstock providers. And then I'm going to wrap up with some thoughts on the cobalt market through the perspective of an EV market and some of the comments by recent major producers. So with that, I will hand over to you, Joe.
Yeah, thanks, Joel. Good morning to all. For those I've not met, my name is Joe Katarabik. I'm the CEO of Cobalt Blue. For those I have, g'day, and look forward to our discussion today. Let me start by just putting a context to our business. Our primary project remains the Broken Hill Cobalt project. We've been developing that since our listing effectively in 2017, and we've gone through effectively into a DFS process. It is a major project as awarded a status by the federal government, and we now have a project partner in Iwatani Corporation. I'll talk about Iwatani a bit more in the context of the refinery, but they remain interested in a commercial relationship as a partner in both the Broken Hill Cobalt project and the cobalt nickel refinery to be located in Kwinana. As a project, it's a very large-scale source of cobalt for the global markets, and likewise with our refinery, our intention is to funnel that material into EU, US, and allied nation markets. As part of our development process, we have a strong product offering in what we're calling our remine business today. Remining is effectively the circular metal or recycling of metal from mining waste area. The same technology that allows us to extract cobalt and other metals from pyrite is the same technology that allows us to extract those metals from pyrite and pyrrhotite deposits globally. And there's quite a large opportunity set. There's a page coming up on that. I'll give you some more detail. In terms of the refinery, I'm happy to report some strong progress with its development. Our relationship with Iwatani remains very strong. We are going through the process of locking down both feedstock and offtake agreements, some more detail shortly, and Andrew can talk about technical and site works as well as a funding update. We are expecting an FID now in late this year, early next, and again, we can talk about some detail there. The key point to make in this market is that the refinery makes a strong margin across the entire cobalt life cycle. So if you look at the refinery, it's a generator of cash effectively from a very low cobalt price that we have today. That's around the $11 to $12 mark, all the way through to mid-cycle, what I believe for the long-term price is around that $27 mark, and right up into the extremes of high pricing. It effectively puts Cobalt Blue on the map as a validated producer of these chemicals into the EV market, as well as giving us a very strong source of organic cash flow. The capital funding, the pre-production capex is targeting to be 60 million. That's a number that has a contingency. So those of you who have read our earlier study released in November will have noticed that we targeted 47 million and change pre-production capex, allowing for contingencies and other costs. We've allowed for 60. At this stage, that number is still very firm. Iwatani have indicated interest of up to 30% in that, and we're committed on that basis. We're committing on that basis. We are looking for cornerstone investment from the government. We have a number of consensual funding opportunities that we're pursuing with government, and we've got some good progress on that. And when we get an update, we'll certainly inform the market of any government commitments. In terms of government banks and agencies, we are in discussions, not just with our own agencies within the Australian government, but because we have Iwatani by our side, we're also looking at really a multinational support for that. So we're making those inquiries, we're having those conversations, and as concrete stepping stones develop, we'll certainly let the market know. We are also looking for strategic equity investors in ourselves But more recently, we're also looking for strategic project investors, i.e. at the project level. Why is that important? Because we're thinking ahead, not just at stage 1, which is a 3,000 tonne per annum metal stage, but we are thinking in stages 2 and 3, and ultimately the potential to build a downstream battery industry. The other thing I would say the refinery gives us is proof of concept for Broken Hill Cobalt project. Effectively, when we're looking at the Broken Hill Cobalt project, it'll make a cobalt intermediate, which will ultimately be refined within the refinery. So by bringing the refinery in today, that de-risks the introduction of the Broken Hill Cobalt project in due course. I promised a slide on the remine. Remining is expanding quite rapidly for us in terms of opportunity sets. We have ongoing discussions with Hudbay with respect to the Flin Flon tailings. We're going through quite a deal of technical proof with that. Project, there's a number of metals we're dealing with. It's not a straightforward single metal opportunity, and we're very confident the technicals are bearing up. That should, in short term, translate into some initial commercial discussions, and that's a very large opportunity set for us and a North American opportunity set. That'll bring global focus onto our business. We've announced earlier Regeneration is a partner in this space. Regeneration is another circular miner. They're effectively a private group that's backed by Rio Tinto as a shareholder, and Rio brings its own opportunity set within its portfolio to Regeneration. So that's been a very good relationship with us. We're in discussions on how we can bring our technology to bear on that broader portfolio. Likewise, we're looking to bring Regeneration in on our own opportunity sets as well. Overall, we now have active discussions and negotiations with opportunity sets in Australia. We have several now in North America, and we're looking to explore in South America with some early days prospectivity. And we have a very strong lead into, or 2 leads now into Europe, which we're hoping to update the market in due course. So overall, I'd say that part of our business is progressing very, very well. And as we go on, governments in particular are more and more aligned with circularity of metals concepts. So that adds more and more of a tailwind to us. We've got 5 projects in negotiation at the moment for test work, and we've had about 10 or more projects already assessed at desktop level. So that's a very strong story for us, and we look forward to updating the market in due course.
Hi, good morning. It's Andrew Tong here, and it's great to be with you today. I'm going to spend a little bit of time doing a deeper dive on our refinery project. If you're somebody who has been following our story for a while, you might recognize some of these photos. Otherwise, if you're a newcomer, then it's great to give you this story and a bit of an introduction today. Here's some recent drone footage of the Iwatani site in Western Australia. This is down in the Kwinana Industrial District. In Western Australia, Iwatani operate the Doral Fused Materials business. So this is the DFM site there. They're currently operating their zirconia plant and producing fused zirconia. We're planning to put our refinery in that yellow dashed box sort of area, that L shape, which sits between the existing facilities on that site. You can see the high voltage power yard in the bottom left-hand corner, and this whole site is already permitted as a refining operation, but we need to go through some permit modifications to do nickel cobalt on this site. This gives us significant advantages and a much faster to market story than going into other locations. We did spend quite a bit of time looking at sites around Australia in the various states and territories, but ultimately we decided that locating our cobalt sulfate refinery in Western Australia, and then more specifically in the Kwinana Rockingham Industrial District, has particular advantages over other sites, namely access to all of the refining stories in the lithium nickel space that are happening in that area. So that gives us access to workforce and skilled labour and also engineering backgrounds for people working on the nickel sulfate industry. They can transport those skills and experience into the cobalt industry. But then also partnering with a significant industrial player like Iwatani provides us direct access into the Japanese markets for our product, but then the reverse input into our project, bringing that Japanese experience into our specifications for product purity, but also handling, logistics. How do you ensure that the product is going to get from our end to their end and not fall apart or become problematic? So one of the issues with handling crystals is that as they go through transport, they can then agglomerate. And so we need to work with partners that have been doing this for a number of years, and then we can leverage off that experience. So there's a little bit of a picture here about the site. I'm going to go to the next slide now, talking around our feedstocks that we've been processing. Cobalt Blue built a demonstration plant in Broken Hill in 2020, 2021. We were a little bit delayed with COVID back in those days, but then we operated that plant for a few years, focusing on our Broken Hill cobalt project. We mined out 5,000 tonne of ore and processed that through concentrate step and then in our demonstration plant. This year in 2024, we've mainly been focused on processing third-party feedstocks, and these are commercial feedstocks that we're anticipating buying for our refinery. So our strategy at the moment is that when that refinery is built, we'll supply it with third-party feedstock, and then ultimately when the Broken Hill Cobalt project gets started, then we can substitute material from there into our refinery and decrease the third-party feedstocks into that plant. So we set out at the start of this year to purchase these feedstocks and do all of our testing on them. That's given us a significant base of test work parameters and optimization parameters that's then feeding into our engineering design. In terms of these feedstocks, it's important to realize in the cobalt space that these are intermediates, or they'd be similar to concentrates in a different context, but in the cobalt space, they're called intermediates because they're chemical precipitates from other processes. So from the copper industry, they'll be processing their copper ores and then they'll precipitate out the cobalt. It could come from the nickel industry where they're removing cobalt before they make their high purity nickel products. So in both cases, we're taking chemically produced intermediates or chemical precipitates. We take these materials, we then leach them, break them down, and then refine them into high purity cobalt. And we have to focus on taking out nickel, manganese, calcium, magnesium, sodium, and so on in our refining process. So this is a little bit different to treating ores. It means that we don't really have other contaminants in there like silicates or significant amounts of iron, but we do really need to focus much more on the trace metal removal. So a lot of our optimization work has been around ion exchange or solvent extraction, where we're trying to separate out those trace metals to very, very low levels so that our final cobalt sulfate product has less than 5 ppm or less than 10 ppm of these impurities. Each metal has a different specification level. So this is the work that we've been doing, and we've now built up a large base of work, as I said before, test work, that gives us significant confidence in being able to treat these feedstocks and produce high purity cobalt sulfate. Thank you, Joel. On this next slide that's just loading up, you can see some of our equipment there. This is our solvent extraction circuit there. We have a number of these units in the plant that we've been trialing. So these are your conventional rectangular box cells. We have a number of other units there that we're trialing as well for capital cost optimization. And then you can see some photos there of the produced cobalt sulfate. We've been running this in sort of a batch mode. So we might be processing a few cubic meters of solution, and then we produce a few 100 kilos of cobalt sulfate, and then we'll go back around the loop and focus on other parameters. Most of the program this year has really been on engineering design rather than product purity, because we had already made some high purity cobalt sulfate at a smaller scale, but really this year it's been focused on the engineering design. So selection of pumps, selection of pipes, selection of materials of construction and so on, so that we can get a very, a lower risk approach to our engineering design, and then that feeds through to a lower risk approach to the commissioning of the plant. Joel, if you could just go to the next slide. I'm going to tie some of these comments together now and just talk through our timeline. I actually want to start in 2026 and work backwards. Our goal remains to be validating our product in 2026. What does that actually mean? As we talk to our offtake partners, validation is really the key hurdle to get through for our project. Every time we talk to different precursor manufacturers, they have a slightly different validation process. Each group's a bit different. Some groups indicate it could be 3 months, others 6 months, 9 months, 12 months, and so on. And really a lot of that is around the sample quantities and the reliability that they want to see. So some groups want to see operations for 6 months and take samples every month for 6 months. Other groups are happy to take 3 months of operating data, and you can get the picture that every group's a little bit different. So our plan is that 2026 will be both our commissioning ramp-up and our validation period. And then after that, once we have those, basically certificates of validation, then we can move into commercial operations thereafter. We're still aiming to build the project through 2025. As you saw on that earlier slide with the site, we've got significant advantages to accelerate that construction period versus building a project from scratch. So we're certainly anticipating a 12-month period. As we've been working with vendor and local fabricators, we're not seeing any particular blowout in lead times for equipment or anything like that at the moment. It's just important to recognise that at this point, in terms of the plant size, a 3,000 tonne per annum cobalt plant means that we're making roughly 15,000 tonne of product. When you work out the hourly production rate, that's only 2 tonne of cobalt sulfate per hour in the plant coming out. So that gives you some sense of the scale. It's quite a small scale facility in terms of mining or refining projects, but it also means that we have a lot of opportunity there to automate parts of the process without incurring significant costs. So that's really a lot of our engineering design work is focusing on getting that balance between capital cost and automation. If I just move back further in the timeline, this year, 2024, as I said, we've been focusing on testing the different feedstocks. We continue to do that, and we'll continue to do that in the Broken Hill demonstration plant. We want to really make sure that we've tested the full gambit of available feedstocks. And so we're also looking at taking things from the battery recycling industry. So we've got that string to our bow. If there's a development in that industry in Australia, at the moment there's very little recycling, but perhaps in the long term there'll be more recycling. So we want to be able to test those sorts of materials in our plant. We've been working through the permit applications. There's 2 key permits that we need to apply for. One is under the West Australian system, it's a works approval. So Iwatani already have their works approval for their site. So we're assisting in preparing a works approval amendment or modification so that cobalt nickel can be refined at that particular site. The other permit is a development consent, which will be with the local council area down there. So once we've finished our engineering designs and the 3D drawings, then we can apply for the development consent to construct the building there. We anticipate that those permits, if we submit them in the next couple of months, it'll take through till the early part of next year. Obviously, there's a bit of a window there with public consultation and then with the Christmas summer break. But we've been anticipating that the permits will be in place early next year. The key one is the development consent to be able to start works on the ground there. Joe's going to touch on a little bit more around the offtake in a moment, but on the feedstock supply contracts, we're progressing those, and we have a number of those working through legals at the moment. Our plan is to secure the finance for this project over the next 6 months or so. There's a lot of different strands to that. There's the equity side, there's the debt side as well on that, and so there's a number of discussions progressing on these. So that's our overall timeline, and we're aiming to start our construction in Q1 next year. So I'm going to pass over to Joe to talk a little bit about the offtake. Thanks.
Yeah, thanks, Andrew. I'll talk about both feedstock and offtake. We are sourcing, and Andrew's done a good job of summarising our work to date with feedstock and processing of that. But we're going to source. We've already sourced the identical feedstock to the commercial plant, so that gives us a lot of confidence with our ability to deal with that feedstock. We have effectively a number of contracts in negotiation for that feedstock, and we're looking to finalise those in the near term. And of course, and then let me emphasise this: any feedstock provider that we enter into a relationship with will be one that's eligible for the US IRA and EU markets, and importantly, have a high level of sustainability and reporting around that, so that OEMs that buy from us can have the comfort that it meets their brand going forward. In terms of offtake, we have some 20 term sheets out for potential offtake partners. We're in active negotiations with around 10. We're offering a number of exposures from interest through to more formal offtake arrangements. So the point I'll make is we're not just thinking about stage one. Yes, we do need to be effectively finding offtake for 3,000 tonne of metal, or for our equity share, which is 70% of that, around the 2,000 tonne mark. But we're very interested in building a portfolio, a book, if you like, of demand that gets us through all the way into stages 2 and 3 and beyond. And for that reason, whilst we'll sign some foundation offtake and announce that to the market, we're also very keen during the validation period that Andrew spoke about to validate not 3 or 4 partners, but probably up to a dozen partners, so that we can create some real tension for demand into that book, as well as underpin future expansions. That's pretty much it. Thank you.
Thanks, Joe. Just before we go to Q&A, I'll give a little update on what we're seeing in the cobalt market, because we do get a lot of questions. And over the past several months, those questions have really been more focused on the EV market and headlines of sales slowing, automakers deferring or canceling model rollouts. Indeed, EV sales have been growing at a slower than anticipated rate. I think some of the forecasters got overly bullish over the past couple of years. Forecasts from our preferred consultants, Raw Motion, which, by the way, have been recently purchased by Benchmark Minerals, who we also use for key market data. They've changed their forecast for 2024 sales from 18 million units to around 17.5. So a modest downgrade, but just as sort of a reminder, this is versus 13.9 million in 2023. So basically they're saying sales will be up this year 27% year on year, as opposed to what they had previously forecast around 32. While this may be sort of a disappointing downgrade to some, I think it's still pretty phenomenal growth for an emerging market. And let's, people worry about uptake of EVs and things, but let's not forget that the number one car sold last year globally was a Tesla. So why have sales slowed? Well, we've looked at that pretty closely, and we find there's really 2 reasons why EV sales have slowed over the past year or so. Number one is the used EV market has picked up quite a bit for 2 reasons, really, and that's greater variability as the market matures and there's more secondhand units available, but also because prices are dropping. And that's also a very timely reminder of how sensitive consumers are, auto consumers are to prices. So once you're able to have a lower price point at an EV, those sales tend to pick up. The second reason sales have been slowing for EVs is because hybrids actually have been more popular than anticipated. Obviously, hybrids been around for a long time and sort of had a bit of a resurgence. Why is that? Well, probably because consumers in the US and Europe remain still a bit hesitant over new EV sticker prices, and of course, range anxiety, as charger infrastructure still remains relatively immature. But those 2 issues of range anxiety and sticker price are temporary, and we can look at a market that's much more mature EV market, which is in China, where there are dozens of low-cost options and fast chargers everywhere, and therefore the EV penetration rate in China is already around 40%. So looking forward, without getting stuck in the minutia of monthly sales data for EVs, we really prefer to focus on the bigger picture of the next 5 years, in which EV sales are set to grow around 250%. So most experts agree that by 2030, which is, by the way, really only 5 years away, global EV sales will reach around 40% of global sales. And given around half of those sales of EVs will be predominantly nickel cobalt based chemistries, this translates into enormous growth for raw materials. Obviously lithium, but also nickel and cobalt themselves. And in the case of cobalt, demand for cobalt in EV batteries is going to rise from 85,000 tons to 280,000 tons over the next 5 years. So it's a huge space that needs to be filled. And we really want to be one of the first ones to fill that. So in summary, is this so-called EV sales slowdown affecting cobalt and other battery raw materials? Well, I think the short answer to that is really no. Demand growth is still very strong. And in the case of raw materials within those batteries, and in the case of cobalt, growing at an annual rate of around 14% over the next 5 years, that's really a phenomenal demand profile for any commodity. The follow-on question to that, of course, is then, well, why has the cobalt price suffered so much over the past 2 years? Well, simply put, and regular readers of our research, as well as these webinars, and we'll continue to say it's all about supply. Mine supply between 2021 and 2023 grew from 150,000 tons to 220,000 tons in just 3 years. Within that huge growth, about 80% of that came from the DRC. And within that profile in the DRC, it's really only one company that's taken the lion's share of that growth, and that is CMOC. That Chinese-owned company operates the giant Tenke Fungurume mine, as well as the brand new Kasanfu mine. And that mine alone just put 50,000 tons into the market in just 1 year. But interestingly, CMOC, who reported their financial results last week, had some commentary in those results. And they're saying that their expansion is now over. So they're not putting any extra tons already than what's now in the market. And they actually believe the overall supply pipeline is now dried up, and they expect prices to recover as demand growth does so as demand growth starts to outpace supply growth. And then coupled with news from the world's second largest cobalt producer, which is, of course, is Glencore, who they recently announced publicly that they have stopped stockpiling and are selling back into the market, a signal that they think that rebalance is also underway. Glencore's CEO made a similar comment that CMOC did just last week, that there isn't another big copper cobalt mine coming on, so the market will have this opportunity to rebalance. So in summary, the supply side headwinds that have been responsible for lower cobalt pricing over the past couple of years are abating, and the market surplus should dwindle and move to deficit market conditions relatively soon. That's my wrap up on the cobalt market. Happy to take some questions on that. And I think with the remaining 15 minutes or so, we'll start to ask a few questions. There are a number of questions regarding green premiums, legislative premiums, whatever you want to call them. Joe, I know you just took place in a panel at a conference in Brisbane this week regarding this. Could you give us your thoughts on what you're seeing as a potential for a premium in our and our peers' products?
Yeah, thank you, Joel. It's a great question. We had a panel of discussion in the industry that lasted over an hour of those in the market who said there is a green premium and will grow, and those in the market like ourselves who think it's just too early in the cycle to predict that. I think if we drop the word green and just talk about a premium product, that exists. Why does it exist? It exists because the US and EU governments are effectively creating premium conditions by virtue of either incentivizing the selective sourcing of materials into those markets, that's the IRA, or using administrative and trade measures to create tariffs on products which are sourced outside of those approved supply chains. So if I could introduce a political premium as a term, that exists, and that'll continue to flourish. The whole point of those politics, well, there's several points. One of the key points is in the US, to compress the cost of the cell pack down to a level where the EV is then price competitive with the internal combustion engine. And on treasury modeling, that should be somewhere around the 2030 mark. But Joel and others in the commodity industry may tell you it's actually accelerating because the technology is so rapidly accumulating. So I think there's a premium at the moment. I think it's politically sponsored. I do think in the longer term, once the cell pack means the EV is on price parity with a vehicle, then consumers will come in with their discretion and pay a premium for the associated price. But while the price is significantly different in the next year or two, the ability for consumers to pay a premium and make a difference in that purchasing decision is very, very small.
Thanks, Joe. While we're sort of on this topic of differentiated products and moving towards IRA, Andrew, I've got a question for you because I know you have some very interesting and strong views about this. Are you confident that our products will be IRA compliant, and how does that give us a competitive advantage?
Thanks, Joel. There's a lot of detail that could be explained on IRA compliance or other things. I really just want to make a fairly high-level comment on this, and it goes like this. At the moment, we're really at the beginning of the regulatory framework. And so you've got in the US, you've got the IRA legislation that's in roughly for the next five and a bit years or so of the initial period. But you've got other legislation that's about to come into effect, the Foreign Entities of Concern legislation, which kicks off in January next year in terms of compliance. You've got the EU diversity of supply rules, which are coming in. You've got the battery passport rules. So there's a lot of different regulatory frameworks that are coming in. And right now we're kind of in that early stage transition period. So what does Cobalt Blue do? Our key focus is to make sure that we're set up for the long run, that we're going to be compliant with all of those different market rules and not just focus on one of them. So our principle is that we ultimately want to be supplying cobalt sulfate into markets that are supported by the government agencies of like-minded or allied countries. And so when we talk about supplying vertically integrated from Australia, that's great. So we meet all of those provenance rules. But then if we're bringing in third-party material, we need to make sure that those suppliers also comply with those various different rules. And so we're working with groups like the cobalt industry to work through the kind of approved mines or the approved providers. But I don't want to go into all the complicated rules. So there's a lot of discussion on that, but I want to assure our listeners today that we're not buying from anybody, but really buying from a subset of the market. And so we need to ensure that in our contracts that they flow through from our feedstock suppliers all the way to our sales.
Thanks. That's quite clear. Moving on to a different topic, a bit more corporate focused. Joe, could you just again summarize when the Iwatani relationship might become a bit more binding, and then within that, will the Kwinana refinery operate as a new entity?
Yeah, thank you. When I think about our relationship with Iwatani Corporation, and bear in mind that's two separate entities. That's the head office, the Japanese business, which is potentially coming in as a joint venture partner for us, and we've mentioned that 30% target already in this discussion. The other entity is the Iwatani Australia business, otherwise known as Doral, with its existing footprint that Andrew talked about before in Kwinana. The short answer, they become binding on FID, so that at that stage, once both parties have made a decision to invest and that's been approved by their respective boards, that'll become binding on both arrangements. But what's important for me to note is that the relationship continues, in my mind, certainly to flourish. Both entities are working, dare I say, hand in glove to promote and develop this concept. So we co-promote the refinery both in Japan. We work with Iwatani to promote it into Japanese industry, Japanese government and other areas. They come with us to Canberra and to other Perth and other meetings to promote our side of the ledger as well as their their footprint in WA. It's a strong relationship. We have and I joke slightly when I say this, a default site office located in their Kwinana area where we have our engineering and technical staff work hand in hand with them with respect to approvals, works approvals, environmental approvals, etc. Overall, I'd say that relationship is very strong, but the formal timing for that relationship to be binding is FID. Will the refinery operate as a new entity? Yes, it'll be a standalone refinery co, and both parties will have a share in that commensurate to their equity. One point I'll make is a slight left field comment here. It's becoming increasingly obvious to us in discussions with both WA and Commonwealth that they see sulfate refining as a bit of a missing link to creating a downstream battery industry. So what I mean by that is we are effectively the link between the mining industry, turning a geologically determined intermediate with so much percentage of metals in various categories, into an ultra pure, globally defined cobalt chemical or nickel chemical that'll go into the EV industry. Without this refinery and without nickel and manganese as well, you will have no downstream battery industry in Australia. So it will be a separate entity, but I'm confident that we have the leverage to go into, and particularly with our Japanese partners on side, to look at further optionality than just a standalone refinery. Thanks, John.
Great. Thanks, Joe. Well, while we're on the refinery, throwing back to you, Andrew, you did a very good job of stepping through the path to construction. And I know you are working full time every day on this. Got several questions around the topic. What do you think is the largest hurdle in getting the refinery into construction/production?
Thanks, Joel. So, look, there's obviously many different moving parts to it. We've got to get through the approvals process, which should be reasonably straightforward at one level, but at another level, it's just one of those things that's not really we can't control. We have to do the applications, and then we have to go through that process. So the things that are within our control is making sure that the engineering is done to the appropriate standard, and we get contracts with vendors and fabricators in place. So we're working really hard on all those things that we can control and get them in. I think probably the biggest hurdle for our overall project to proceed to commercial production actually comes in 2026, which is a validation period, and getting significant inverted commas runs on the board in that period to qualify for the production. So while there's a number of what I call hurdles between here and there, getting the permits done and getting the construction underway and getting the finance and those sorts of things, ultimately the number one hurdle, which is still a year and a bit away, is that validation. To get there and to de-risk that is one of the key reasons why we continue to run our Broken Hill facility, is so that we get more operating confidence that when we decide to turn the plant on in commissioning, we then don't have equipment or process or chemical breakdowns or problems. We've got a much more confident basis to turn that on and know that we'll start producing product. Then it becomes working hand in hand with the other side to validate that product. So that's going to be a huge challenge, but that's a challenge that the whole industry faces. How do you break in as a new supplier into an existing market? And particularly coming from Australia, there really hasn't been many other benchmarks in Australia to break into these chemical industries. So that's going to be our big challenge, but it's not for now. That's a year and a bit away.
Thanks. While we're out in WA, Andrew, had a few questions on the impact of BHP's closure of Nickel West, not only on Cobalt Blue, but just sort of the broader region. I know you've got some pretty strong views on that.
Sure. First of all, I wanted to correct you. It's not closed. It's in care and maintenance. And there are particular words that go along with that in terms of their operations are still under review, and BHP have been pretty clear in the public domain around coming back and looking at those decisions down the track. So just want to clarify that. In terms of our operation in our cobalt sulfate refinery, of course, it's disappointing when other people in our industry turn off their operations for various reasons, because we like to see our whole industry succeeding. So it's a little bit disappointing from that perspective. In terms of our actual design, it's not impacting anything on our side at this point in time. But across the industry, and particularly the nickel industry, there is a bit of a bearish sentiment at the moment. But a lot of people are just waiting to see what happens. They're not giving up or walking away from the assets. They're really just there waiting to see how things are going to play out over the coming 2, 3, 4 years. One of the things that has happened in response to the nickel industry in WA having these headwinds is an acceleration of federal government support to the industry through things like the production tax credits. So I want to commend the government on trying to facilitate industry activity. But ultimately, these decisions are longer range decisions that are going to take a little bit of time to work through.
Thanks, Andrew. I got one really simple question that'll be difficult to answer, but when will the cobalt price rise? Look, we all wish we had crystal balls to try and understand that. Obviously, we're pretty close to the market and look at it in as much detail as we possibly can. And I did my best to show you what we're thinking by showing how we're modeling it out and seeing that supply growth starting to slow while demand growth stays the same. So you'll get that rebalancing eventually. We think, basically from this point forward, you're starting to see demand growth outpace supply growth, so that massive oversupply will start dwindling now. But at the same time, I also like to take this time to remind what Joe was speaking of earlier, is that on the refinery economics, we're far less much concerned about what the actual cobalt price is, because we're buying feedstock at prevailing prices and then selling it, our margins. So it's nice to be a little bit less worried over where the underlying commodity prices go when you are operating this type of refinery model. So that is encouraging to us. Look, we're nearly out of time. I've got one more question. I'm going to throw it to you, Joe. And it came from the chat box. And it's very nice to hear that our strategic plan is clear and encouraging. But can you elaborate a bit more? I know you touched on it, but elaborate a bit more on what is the equity plan and what shareholders can expect over the next several months as we focus on the fundraising.
Sure. Thank you, Joel. Look, we will need equity for the construction phase, but we're looking to be prudent in how we go about that by looking to take strategic partners in to that. So as Andrew mentioned earlier, we have a construction phase, which is effectively larger an equity target, and then we have a working capital phase where we're looking to work with particularly the agencies to help us on a revolving line of credit or a working capital style facility. Within a construction phase, we have 70% of that clearly. We're looking for some government cornerstone investments with us, because we want the government to work with us to help crowd in attractiveness, because once you have a partner, you can then promote that as being effectively a government preferred project, if you like. And then within that, we're also looking for strategic investors. More recently, we've looked at project level investment as well. So we're looking at a full gambit of raises. And then last of all in that pecking order is just a plain old equity raise. And clearly in this market, we want to avoid as much of that as we can, given that would be dilutive. So that's absolutely last preference, but we're finding good conversations and good direction with respect to those strategics and government and other partners. So that's a work in progress, and we'll update as we go through.
Thanks, Joe. Very clear. I hope that's clear to everyone. We're working very diligently to get this strategy up and running. I'd just like to thank once again our existing shareholders for sticking through us through this very challenging cyclical period of the both commodity and company history. But we're very encouraged, as you can hopefully tell by the tone, and we've got lots on, and we're all very busy working hard trying to achieve this strategy. So once again, on behalf of Joe and Andrew, thanks for joining us. And we hope to provide another update again soon. Thank you, everyone.